Just coming across the wire, Sam, while you were mentioning how they closed today, EPS coming in for them at, let's see here, just came across as I'm scrolling, at 287, besting estimates for 226, so a beat there. As we're looking at their revenue for Google services, this one would be a key figure, $87.05 billion, also a beat there, $84.67 expected. Google search revenue, another key metric for them, $56.57 billion, also a beat here, 54.99 was the expectation there. Markets responding really favorably to this, up 3.5%. They're seeing their revenue beat, their EPS beat. They had double-digit growth across every major business category that they report in. This is exactly the kind of report that they were looking for. Their CapEx spend coming in at $23.95 billion, expectations for 22.38. Overall revenue for the entire quarter also a beat, $102.35 billion. Estimates calling for $99.85. I want to bring Kevin Green back into the conversation and also you, Sam, as we're taking a look at this, also getting some information about the cloud. This was a very important feature, that metric that a lot of the guests we were speaking to today said would matter. The cloud ending with $155 billion in backlog here. Just enormous numbers that they're putting up. Advertising revenue coming in at $74.18 billion, $65.85 last year. Also saying their Gemini app now has over 650 million monthly active users. So KG coming back in as we're looking at this report, now moving up 6% to the upside on these numbers. You know, clearly a very strong report. It's everything everybody who is a Google stan wanted. You know, what are some of your key takeaways as they're still coming across?
Yeah, I think the numbers overall obviously exceeded the street's expectations here. I think the market's still trying to digest a lot of the numbers because they actually did take a $3.5 billion hit that is showing up in expenses. So that's going to kind of dilute maybe some of these numbers and some of these metrics, especially when you're looking at operating margins. But overall, you are seeing that increase in CapEx spend, around a $6 billion increase from what they actually cited or estimated beforehand here. So that does give you kind of that fuel for the semiconductor plays, the utility plays out there to really still shine because the CapEx spend is not slowing down by any stretch of the imagination here. But once again, I think the market's really trying to digest this because there are a couple of outliers when you're looking at this report. But from the headline view, this actually looks like a decent read, at least for this quarter. Let's see how these stocks actually respond to these CapEx increases. I mean, at some point, there might be a concern that the free cash flow is going to be impacted pretty significantly. I'm not sure if we're there yet, but you are seeing a lot of gyration with a lot of these names after hours after they posted earnings results here.
And certainly, and Sam, I want to come to you. You know, I know you had a lot of conversations today about these earnings in particular and how important those CapEx numbers are in all of them in this AI race. Seeing their CapEx for the fiscal year up to $91 to $93 billion, was supposed to be about $85 billion. In terms of those increases, is this what the people you were speaking to today were looking for? They want to see this increased CapEx spend.
It's exactly what they expected, I would say, Marley, because when I asked a lot of the analysts, you know, who was best positioned on the CapEx front, they very much seemingly said Google Alphabet is the best placed here, very much in a sweet spot, and wouldn't be surprised if they continue to throw big numbers out there as far as what they're spending, as far as what they're doing on the CapEx front. And that is because, of course, they are continuing to see growth. I mean, look at that, double-digit growth across most of its divisions. I mean, they've been saying how it's been a terrific quarter for them. So, you know, I don't think it's a huge surprise that we've seen this from Google Alphabet, but I think, you know, KG raises a really interesting point. At what stage are we going to get, you know, these questions from the market about, you know, how exactly are you monetizing from that? Now, I've also asked analysts about that. You know, if we don't hear with these companies matching what we're seeing as far as forecasts on CapEx, or as much as people are anticipating, do they have to then make up for it with explaining and giving evidence of actually how they're monetizing from it? And many people say that, you know, with the companies that we're looking at today, Google Alphabet being one of them, they are actually showing how they're monetizing from that. And, you know, they've also been striking deals as well. I mean, you've had the Anthropic to use TPUs from this company as well. I think also the big focus very much has been on that cloud, as well as you mentioned, and I suppose they've delivered on that front as well. So yes, I think, you know, the search is expected to continue to grow as well, and that looked good. So I think all round it looked like a very strong report. But let's see, yes, as KG pointed out, and some of the analysts have been mentioning as well, at what point do we start to have these questions of show me proof of all this spent?
And I want to move over to Microsoft here too. Some breaking news we haven't addressed yet in the show. Microsoft actually having an Azure outage right now in the midst of their earnings. The shares right now down about 4%. I'll walk you through some of the numbers. EPS coming in at 372. Expectations were for 365. In terms of their Azure and cloud revenue, it's up 39% year over year. For the quarter, that cloud revenue came in at $49.1 billion. So, a strong performance here. Sales of overall $77.67 billion, beating estimates for $75.32. KG, I know these are just coming across here, but, some thoughts as we're seeing the shares falling about 4% right now, just a little under 4% on this earnings report.
Yeah, so this is a company that actually provides their guidance, and a lot of these companies that we're going to talk about today provides their guidance on the conference call, and their leadership is a little bit more, let's say, realistic when it comes to their outlook for the economy as well as their own environment here. Productivity and business processes actually did beat the street's expectations, coming in at $33 billion. Street was looking for $32.3 billion, maybe not enough of a beat to really excite the street here. More personal computing revenues came in at $13.8 billion. Street was looking for $12.8 billion. You kind of talked about that beat both on the top and bottom line here. They are experiencing an outage, but what I will say though, Marley, everybody right now, all the big names are experiencing outages right now. So it's not only Azure, but it's also Google Cloud and AWS. They've been experiencing that for the last couple of hours or so. I'm not sure why we are seeing them move to the downside, but this is a stock that can turn around given the guidance that they're going to provide on the conference call here. I'm not seeing anything in the numbers immediately that's giving a cause for concern for Microsoft, at least for now.
And Sam, I want to come back to you with this continued CapEx story. We've talked so much at length about it. The CapEx number just coming across the wire here as well at $19.39 billion. Estimates calling for $23.04 billion. I know, some of the guests I spoke to today were really looking to see an increased spend or proof in the pudding of the spend that's already been given. Is there, potential there that number is just not enough?
I mean, it could be, but I mean, at the end of the day, I think in a lot of these companies, as far as, what I was saying earlier about the expectations of meeting some of that CapEx, it's going to become a time when we actually have the street questioning, show me some of this monetization, show me sort of a proof of, what you're spending all this money on. And so some of the analysts that I spoke to actually said, it's okay maybe if we do see a slight pullback in some of that spending. And I think, Jenny Horn raised a really interesting point as well about some of these companies that have been spending so much, would this eventually become a problem of margins, a hit to their profits? So, I don't think 19 billion is too much sort of off the mark. I mean, we could be splitting at hairs here, but I mean, still, these are huge double-digit numbers that they continue to commit to as far as their spending plans are concerned. But I mean, I think the focus very much is on the Azure cloud business. As you mentioned, we have seen this outage. No doubt this will be one of the questions on that call later this afternoon, because, we've had also so many of these outages, which has raised the question, just about, how much we rely on some of these companies as far as, these sort of near monopolies that they have in this space. But, I think Azure expected to grow over 30% last quarter. As we knew, it wasn't good enough. But I think, also the big focus for the street is also with this business around the PC shipments as well. So it's going to be interesting to see what they have to say about that too.
Yeah, and that cloud growth up 39% in their fiscal first quarter. So, some impressive growth there. But like KG mentioned, the call is where we're going to get the guidance, and we've seen how important that is this earnings season. Kevin, I want to thank you for being with us to break down Microsoft and Google. Thank you so much for taking the time to do that with us. And I do want to bring in George Sillis now to the conversation. We have to take a look at Meta. They're also out, shares trading down about 6% right now. George, I'll just walk through a couple of the numbers. Third quarter EPS at $7.25 is beating expectations for $6.68. Sales coming in at $51.24 billion, beating estimates for $49.38. As far as what we're seeing these shares really slide now. What is the reaction that we're seeing from the street here in the numbers that you've had a chance to take a look at?
So one of the things I noticed, Marlon, when I looked at this that kind of irked me a bit was if you look at the CapEx numbers last year for Meta platforms, around $52 billion. When you take that number and you look at their sales, it was actually about 25 to 30% of sales last year. So to me, going into this print, based on my valuation, was the sensitivity this name has to CapEx relative to sales. It seems to be the highest one on a percentage basis, not in total nominal dollar amounts. So irrespective of the move we saw in EPS, which is really good, up to over 20%, as you mentioned, $7.25 per share, relative to $6.03 last year for the same quarter. Sales 51.24. Much higher, about 26% versus the 40.6 last year. The CapEx numbers still continue to move higher. For instance, the midpoint now is around $71 billion for the fiscal year, an additional $2 billion relative to the estimates, which were $69 billion. So if you just roughly do the math here, we're talking about another 40 to 50% increase in CapEx compared to last year, or at least in the last 4 quarters. But sales aren't necessarily increasing as fast. So my point is that the CapEx ratio to sales is accelerating for Meta, and it seems to be more sensitive to that because, again, the further we get along through this, AI integration process, everyone's going to be looking for return on investment, and it's going to be highly sensitive to those that are spending quite a bit relative to sales, and that's Meta Platforms. That's my evaluation.
And I want to point something out here that could be some of the move that we're seeing to the downside. I'm digesting this in real time with all of you. The EPS came in as a beat, but there was a $16 billion charge on a tax bill that, if you factor that in, does pull those numbers down significantly once it's factored in. So, this likely, they're calling it a mixed report. Initially shares dropped as much as 7%, still down close to that number as we, take a look at some of these financials. But the stock was trading higher, 29% up so far this year before we got into this report. Sam, as far as commentary on the call and guests that you spoke to today, what are they looking for from Meta?
Well, I think it's very much squarely focused on the AI spending because we've seen so much of that lately. And obviously, this has been such a big focus for the company as well. Interesting that, yes, as you pointed out, it was a mixed quarter as far as what the company saw. And, taking that one-off hit as well, you just wonder and perhaps hope that that was a idiosyncratic type of event here as well. But I think, obviously pulling a lot of money from that or at least pulling in a lot of revenue, I should say, from advertising. I think, the big question for the street now, and no doubt which many analysts will be asking on that call, is very much how AI spend will actually materialize. Because over the, couple of last quarters or months, we've been hearing a lot about, their AI spending plans and obviously the people that they've been hiring with a lot of question marks around what they're actually being hired to do, what their job is actually going to be. And so I think, there's going to start to come a point where I think, those questions are going to have to be answered. And I think that's certainly what my takeaway from some of the analysts' commentary was today on this one.
All right, so let's move to Starbucks now. We talked about this earlier with Alex Coffey here on the show. EPS is a slight miss, 52 cents, expectations for 55. Revenue for their fourth quarter coming in at $9.6 billion. Estimates calling for 9.34. And right now, as we're digesting these numbers and taking a look at them, it seems to be this conversation that Alex was saying about it doesn't have to be a great report. It just has to show some improvement. May be enough. Shares trading up 2% higher right now. Let's talk about these comp sales, up about 1% overall. Estimates calling for them to be down 0.5%. That was that key important metric for them, those comp sales. Now, U.S. comp sales were flat, pretty much in line with expectations, but those international store comp sales up 3%. Estimates calling for 1.75. So that offset China sales also growing by 2%. That's pretty much in line with estimates there. But this comparable store sales story is what everyone was looking for. This is that proof of the turnaround plan that Brian Niccol has launching. George, coming to you as we're looking at this, they did miss on the EPS, revenue higher, but that we knew that comp sales number was in focus, and it's better than expected.
Yeah, and again, the EPS, adjusted EPS could be done for various reasons, other than comp sales, which I think are very meaningful because if you look at last quarter's total system-wide comp sales across the board, were down 2%. So at the very least, they demonstrated positive growth system-wide on operating leverage. It's very important for projections on yield going forward. And the sales numbers also came in ahead of estimates, which are a good sign. So you're seeing both the top line growth and the same store sales improve relative to prior estimates. And that's why we're seeing some pickup in the shares once again. But I'm not sure exactly why the adjusted EPS missed for the quarter, but nonetheless, it could have been just basically other issues, tax or currency issues, which were unexpected. So at least some positive, at least news action in Starbucks. There is some positive price action after the call, but I think guidance for the remaining of the year is going to be important, as well as for maybe for the first 2 quarters of next year at the very least. But overall, pretty good quarter for the company, which has really struggled, particularly in the last year, with the stock down about 15%.
Yeah, it shares up 2% on the heels of that news. Sam, I want to come to you for Chipotle, though. I know you and George talked about Chipotle for overlooked stocks. EPS coming in line at 29 cents. Revenue coming in at 3.08, mostly in line, expectations for 3.02. But comp store sales missed on estimates. And they're also saying for fiscal year comp restaurant sales, they're expecting some declines. So, as far as that conversation we just had with George, what's your takeaway from some of the other conversations you've had today on how this is going to impact Brian Nichols' former company?
Yeah, it's a bit of a different story, isn't it, with this one? And, I suppose this is going to be challenging because this stock, as George and I had already been running through, had been struggling already. And, we had certainly got some commentary out last quarter about how things were perhaps turning around as far as some of that foot traffic. Yes, they had sort of tried to mitigate some of the inflationary pressures, but they have had to actually increase their prices as well. Perhaps we are seeing some evidence of that. I mean, this is a cost-conscious consumer. We've heard those words certainly from companies like this, and this is obviously something that they have been grappling with, not just with the macroeconomics, but also with respect to also some of the tariff impact as well. They have said that is largely minimal, but yes, I mean, I suppose this is not a great quarter then for them, with a bit of a mixed picture certainly on this front. Marley, I'll send things back to you.
Well, thank you so much to Sam and George. Our winners on these earnings report: Alphabet shares trading up almost 6%, Starbucks up 2% higher. Our losers in this earnings race here: Chipotle actually moving upwards now. People digesting this report and this same store sales miss, but not a bad report. Inline results there. Meta Platforms down 7.6%, Microsoft down 3%. And thanks for George Tillis for being with us.